Good morning, everyone. I'm Gaurav from InCred Equities. Nifty continued to reel under pressure. At one point, it was down to 100 points. There was a bounce back, which we tried to play out by means of a call option, which tripled after a buy recommendation. However, that energy, that enthusiasm, that happiness for the bulls was short-lived, and Nifty went lower, closing near the low point of the day. With this, Nifty has seen 2 days of consecutive weakness, decimating every support one can think of. 24,500 being the most immediate one. There are two interesting things here. I was looking at Bank Nifty charts yesterday, and on half hourly charts and hourly charts, or one can say intraday charts, we have seen bullish divergence in RSI, meaning the prices of Bank Nifty made a new low, but same was not the case with RSI. Now that basically means that the intensity of fall should likely mellow down going forward, and we may see a temporary bounce. Whether the temporary bounce turns out to be a bottom will depend on how the follow buying emerges, or it can be just a temporary bounce for a day or a few hours also. Another interesting aspect is bullish divergence in MACD, which is a rare pattern in nature, which was seen in 15 minutes, 30 minutes chart, not only higher time frames of 1 hour or 75 minutes. So let us see if that also happens. We see a bullish crossover on longer time frame charts intraday at the end of the day, but even say 1 hour, 2 hour charts, then that would also mean that we may see a more prolonged bounce back sort of coming in. The second part, which I talked about, which is the interesting one, is if we look at the yield accounts, if we sustain the previous swing low in Nifty, which was around 24,200, 300, then this particular fall may be part of a wave 4 correction, and then we may head towards a fresh high to form wave 5. It might also be start of a smaller wave 2, which is completing, and then we may start a smaller wave 3. So what happens is there are wave within waves. Wave 5 should also be part of 5 waves. So that might be the case that is being formed here. So interesting things ahead. Let us see how this particular correction pans out. If we are heading lower, if we see a bounce back. US market yesterday closed on a mild positive or flattish note, 25-30 pips higher. Gift finish pointing towards 50 points upside as we speak. So in all likelihood, we'll open on a flattish to mild positive note. As I said, uh, on multiple occasions, that where we start is not important. As we have seen on multiple occasions, we start on a positive note and then we drift lower. What is important is sustained move. Yesterday's fall can also be contributed to the monthly expiry, but let us see if it's an excuse by the bulls to justify the fall, or their purported upside expectations, or whether there is actually some meaningful bounce that can be seen. So today is going to be a very critical day, a monthly close as well on chart patterns. So I'm hopeful for a bounce, but let us not be in too much of hurry to buy the indices right away. Play with strict stop losses if people are buying, and be stock specific. That will from myself. Thank you.
Investments in securities market are a subject to market risk. Read all the related documents carefully before investing.